just a couple minutes late. Just had a busy morning session and a lot of trades going on, sending out some updates to followers. We're going back here. Okay, very nice. So, got a lot juggling today. We're sitting up at fresh all-time highs again on the S&P and the Nasdaq. We had a big rip up out of the look at this futures move, man. Just a nice little 8:30 candle, solid breakout right around 9:30 opening bell, and this thing is up. Let's see here, about 90 points. Not too bad on the old Nasdaq futures. So pretty straightforward trade. Even if you did the 9:30 breakout candle, which is what I like to do usually. So even if you box this one in, you still had a nice breakout. But that 8:30 candle with non-farm payroll, which today came in positive. Have a lot to discuss here just based on the news the next couple of weeks. We've got 6 central bank rate decisions. We're looking at some cuts coming. We're looking at a lot of shifting in monetary policy. We've got inflation data that's expected to be a little bit hotter next week. So for today's non-farm payroll, we beat on the U.S. dollar, the U.S. Jobs front. 218 came in 227 with a positive revision. This is my favorite, from 12,000 to 36,000. Oh baby. So green on the job side, average earnings up as well, and unemployment rate ticked up a little bit from 4.1 to 4.2. Still historically low on the employment side. I'd say job numbers overall are pretty darn good. The market is just hanging out a little bit higher. I'm wondering if we just continue to drift up today. I'm watching to see if my SPY will hit like 609 and change. I'd ideally like to get to like 609.50, up to potentially 610 on the day, or at least tap that level. And then AMD, I'm looking for a move up into, let me actually show this here. So I'll keep this on the SPY just for a reference, and I'll keep this one on AMD. Right now it's 142.50, and I'm going to keep a close eye on this. If this gets up into 144, 145, I can turn that little butterfly spread into a nice gain. So we will find out. Going back to the news, like I said, job numbers coming in pretty solid. Going to the news next week. Okay. I want to talk a lot about, it's very inexpensive to be hedging right now. I just don't think it's a good idea. Like, I'll say this. I put a hedge on this week on SPX. I did a 6050 by 6055 bear call spread. That was in Pulver alerts. And I'm probably just wasting the $250 on it today, or this by today, because it was expiration. Now, moving forward over the next 3 to 4 weeks, I'll show you how cheap it is to actually put on like a bear put spread. You can basically pay like $4 to make 14. That's pretty solid. I want to talk about that, and I just think as long as I'm still going to play some hedges. I think I have to, just in case there's any type of late year surprise. If the Fed does something to, you know, I don't know, jerk the steering wheel towards the end of the year. I don't think that's really the case. But I also don't want to go unprotected in case the market decides to dip a little bit, because we're melting up. We're not making broad market highs. We're making Mag 7 highs. So we have had this interesting rotation into, it was a broader market lift where like utility sector's killing it, financials are killing it. Russell small caps started to catch up in a big way. Now the Nasdaq is running. Why? Because Nasdaq is, heavily influenced by Mag 7. Apple's at all-time highs. Meta hit all-time highs. Amazon hit all-time highs. And Netflix has hit all-time highs. I know that's not a Mag 7, but it was, the old Fangman stock back in the day. So anyway, we're kind of back into that like concentrated Mag 7 leads the way, drags the ETFs higher, and broader market is kind of leveled out. Advanced decline line has not been all broad. We still have a lot of stocks that are above the 50 moving average and the 200 moving average, but not making like fresh all-time highs on a lot of stocks. It's only a few. So going into next week, we have 2 weeks ahead. We have a lot of data to digest for the market. 6 central bank rate decisions, starting with the Aussie. RBA is looking to pause next week. That's a Monday, 10:30 p.m. Eastern time decision. And we'll see what the statement reads, but forecasted to pause. I was actually surprised to see the forecast coming into the calendar today. I expected this to be like a Sunday, Monday. Anyway, so coming into the calendar here, we also have U.S. data on inflation. So CPI forecasted at 2.7. Here's the previous prints. Okay, you can track it on your Edge Finder. We got down to once we tap below 3%, we cracked that 3% mark. We went to 2.9, 2.5, 2.4, and then we are now 2.6. Now we're forecasting 2.7. I don't know if a 0.1% change or increase or slightly higher inflation is going to break the market. It probably will not. But this is also watching the Fed with a much higher probability of still cutting. Look at this. This is stupid. This thing has gone from around 72% this week up to 79, down to 64, up to 88. Now it's at 90.8. Probability is just gaining that the Fed's going to cut in 2 weeks. So, I mean, for this thing to drop aggressively would be, it can happen, but it's I'd say improbable based on the statistics we're seeing right now. The market is essentially, baking in that we've got another cut coming, which is also why this melt up I think is taking place. And the run and melt up and drift path of least resistance continues to be this market just wants to go higher. So don't fight it. I'm not calling the top. That is for sure. If it melts up, it melts up. That's pretty easy. Had some credit spreads winners today, which is nice. All right, let me check and see here. Well, that was quick. That was up to 34 cents. Now it's at 20. Come on, AMD. Don't be a turd. Give me something good at these strikes. So the nice thing is I've got some butterfly trades on, and if you trade butterflies and options, they look like this. Okay, so I have risk, I have a profit trap, and I have risk. So that's what a butterfly spread looks like. This is just an equidistant butterfly spread. So my 145 price on AMD, if we are, trading at 142, this is live price. So I need to see if we can get into this little area. This level is going to be 143. So if we get above 143, I start to see some of this profit trap. Today's expiration, we get into 144, 145. I've got potentially like a 200 to 300% winner on that position. So I'll see if we get lucky. Just watching some price, but chart alarms are set. I'll keep an eye on it. Let's go back to the SPY for a second. Highs on the SPY, we're trading at 0.36% higher. The Qs are just killing it right now. Big gap from Tuesday to Wednesday. Wednesday was a nice bullish day. Thursday was a pause. Friday more all-time highs today, and we're pretty relentless. The Dow's up 0.14. The Russell up 0.33. Again, Nasdaq leading the way. We'll check on some Mag 7 here in a moment. Let's look at the heat map for a second. Heat map is United Healthcare. I'm seeing is red. I kept probably giving the news this week. That's unfortunate, but that's what it is. Nvidia flat on the day, but you got some other semiconductors hanging in there. AVGO is up. AMD is up. I need AMD to get to 145. You can do it. We've got some big tech here. Oracle up. Oracle has earnings next week, if I'm not mistaken. Adobe is up. Palantir up again. Jeez, man, this stock is relentless. I wish I just had some shares, but I don't. I just have a bunch of options. Apple, sitting near those all-time highs or at all-time highs. Amazon up to some fresh highs again today, up 1.7%. I mean, anyway, Mag 7, these like massive boxes here on the heat map is market cap. So these are big companies showing some pretty good gains. I'd say broadly, we're probably seeing more stocks higher than lower. If I go to the homepage here, we're looking at about 64.3% above the 50 period. We got the advanced decline, 61.5% of stocks advancing so far today. And like bull market is still pretty much in play. I mean, very much in play. 64+% of stocks above the 50 moving average, 67% of stocks above the 200 moving average. Let's go to the fear and greed index for a second. And let's also go to AAII. I just want to make sure I'm not missing any type of like big shift in sentiment. I mean, this is pretty wild. We're actually at neutral on the fear and greed index. I would think based on stock momentum, we are, in the greed territory, but this shows neutral. Why is that? Market momentum, extreme greed. I think we can sense that. Stock price strength. Net new 52-week highs and lows. That's wild. So we have extreme greed on momentum, but we have stock price strength at fear. Market breadth, fear. Put call options, greed. Market volatility, neutral. Safe haven demand, fear. Junk bond fear. Weird. Did this all just shift recently or something? I've seen safe haven demand, like, I don't know. This is weird. So it's like it's almost just centering itself. So safe haven demand and junk bond showing fear. That's weird. It's like people are just loading up on safe haven just to be safe, but we're just kind of riding out this momentum as long as it wants to kick. Okay, let me check sentiment here. So 48.3, 1-year bullish highs at 52.9. This should have. I'm trying to think when this thing closes. This is a Wednesday print, so the next one should be. Let's see here, 12/11, which will be next week on Wednesday. I mean, it's not extreme. It's like it's getting a little bit frothy on the bullish side, but historical averages, they're slightly tilted bullish. When we get up into the high 40s and we crack 50, then we usually look for some type of pause or correction. So I don't know. It's going to be interesting to see how these sentiment readings play out over the next couple weeks. So it's kind of officially like Santa rally window. Technically it's the week of Christmas, week of New Year's is called the Santa rally. I've always kind of said this holiday window is Thanksgiving to the end of the year. So Thanksgiving into New Year's, usually the holiday rally. Not a lot of disruption. I think the only thing that really affects the market is going to be the Fed. I don't think the Fed's going to do anything to disrupt it necessarily, but that's where the potential lies. Um, and I say that as in, okay, let's say they cut, but they're staring at higher inflation. I mean, just hypothetically here, let's say that next week on Wednesday with CPI data, this thing prints 2.8 or 2.9. Is it enough to rattle the market? Not necessarily, unless the Fed rate decision for the 18th all of a sudden shifts from 90% back down to like 60%. Then we go into like the 18th with like, is it more of a toss-up trade? Is the Fed still going to cut? What are they going to say at their press conference? So that does make it pretty annoying, but that's just the reality that we have to be mindful of. So reality is inflation is going higher. We've talked about this for the last couple of months as well. With the election especially, I do think that the lower oil prices and the pestering of the lows at like 67, 67, 67, oil's not above $70. When we keep tapping those lows, if the US is going to be drilling domestically and pumping supply, that also keeps inflation somewhat contained. So we can have inflation in services and housing and other things. I mean, cost of living has been about 4+% higher for the last 4 years, and it's being felt. Okay. But we're being told that, we're targeting 2%, and that's the Fed's mandate and blah, 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 blah. But we're not anywhere close to 2%. Real inflation numbers, not 2.7, not 2.6. They're not even close. But this just means that prices are going up. They're just going up a little bit slower than they were a couple years ago. Last year we were at 3+%. Before that, we were up to 9 and we had to come down to that 3%. So it's basically, the reality is we're operating within about a 2 to 4% inflation window. And for the Fed to keep saying with conviction that they want us to be at 2%, want us to be at 2%, we're so far away from that. And a lot of other forces have to work in order to get us to 2%. Now, that being said, I will also say that the 10-year yield is cooperating. Okay, it's down about 0.55% today. I don't necessarily look at this chart and say, okay, we're at a technical level here. There's not a lot of technicals to this, in my opinion. We're either going to continue to go lower with inflation pressures easing, or we are going higher with the bond market and the yields continuing to say, look, the Fed is allowing inflation to bubble, and if it starts to resurface and start to overflow a little bit, then this 10-year yield can go up. So I keep saying in one chart, I would summarize the ability for the market to keep making higher highs and have this good optimistic outlook. It's got to be lower on the 10-year yield. That to me is where I'm going to be more bullish than I am right now. If this is sideways, then I'm obviously like fairly cautious, maybe cautiously bullish, maybe just holding on to positions and just waiting for good opportunities. If this is going up, I'm looking a little bit more to a correction in 2025. Okay. All right. So watching that 10-year is going to be important. Let's take a quick spot check on some China stocks. China's up today. What the heck? You can do it. HSI up 1.56. Alibaba, gap higher up 2.44. Baidu at 86, FXI 30.88. K-Web up a little bit, 1.45%. JD to 37.64. I've got a 38.50. Give me that. And then I've got Apple with some calls. Here's my Mag 7. Where you at? Mag 7. Apple hanging out near all-time highs. Amazon at fresh all-time highs. This thing is ripping. I did a roll this week on Amazon. I rolled it out and up, so now I'm covered at 220 out to March. I will continue to roll out and up with a stock that I really like. I'm also going to be looking to add some protection, probably some controlled protection at some point, maybe a bear put spread. Google looking a little bit better at 174. I need this to stay above 155 and 160. Meta cracked an all-time high today. Microsoft, somebody just told me this morning in an earlier session that there's some news on Microsoft with potentially adding Bitcoin to their treasury, a la Michael Saylor style. And so if Microsoft is getting that type of run, does this all of a sudden become a weird large tech, Mag 7 proxy around Bitcoin? Yes, no, maybe. I'm not sure. But it's had a pretty good run from the 200 moving average at 411.50. I have a debit spread. It's a 430 by 435. I mean, right now that's looking to be in pretty good profit out to December. Let's check on that one. This is in the Pulver alerts. So if I go into Microsoft, right? That's MicroStrategy. So here's my 430 by 435. I also have, I had a bunch of these earlier. These are like ratio spreads and other things when we had that August dip. So right now that trade is showing, what did I pay on this one? So I paid 260 or 264, 1924 minus 1660. I paid 264. And right now I'm looking for a max profit of $5. So what's it showing for close? 405. Okay, so I still got another 90 cents of credit that I can have. Right now my trade is it's out of the money. So that's actually, I take that back. It's an in the money debit spread, but this would be closing for full profit with the maxed out at 435. So if I get this, let's say the 264 debit, if I see it trading for like 475, 480, 485, depending on how much time is left. I'm only in this trade for another couple of weeks. It expires on the 20th, so that's 2 weeks from today. So if we just have another holiday melt up, nothing majorly disruptive, then I'll end up taking that profit. So I'll let time do its thing, see if we get up towards those highs again. Obviously, if the news next week, like I said, if they're going to be adding Bitcoin and that's given Microsoft another little surge, then that trade looks even better. Okay, Netflix also cracked some all-time highs this week. We're just nearing those, or we're at those again. NVIDIA, I still don't think NVIDIA has much room to run past 150 to 155 in the short term. Okay, in the short term. Now, I say that because we are sitting around 475 bars since we tested a 200 moving average, which is this red line. Look, there's two ways I want to play this. I have some trades in here that I'm willing to kind of own and repair. If I get assigned any NVIDIA, I'm going to take it. Okay. If we have some type, this is what I could see happening. If the markets are just kind of drifting higher, I can see NVIDIA just doing this. Just a lot of sideways, allowing this 200 moving average. I'll put this in red here, allowing this to catch up. So if this just slowly catches up to price, that becomes a dynamic support level. Okay. So what I'd be looking for would be if price just goes sideways, I'm not necessarily looking to trade, a bear move on NVIDIA, or I'm not buying it at these highs, but I would say that if we came down to the 200 moving average, we're really interested in establishing some fresh positions. If that doesn't happen and we just go sideways, then I'm looking to see if and when we bounce off that level, starting to establish a small position there, and then look to see if we can, resume this uptrend. But I don't expect there to be big gargantuan rips higher on NVIDIA without at least finding some of this balance, because it is now at a point where we don't see a lot of bar counts get over 500 bars on a daily time frame. The S&P is at 270 or so, 280. The Dow's at 270, 280. The Nasdaq has already hit the 200 moving average with that August bottom. But you've got a lot of stocks that just look like they're drifting higher, stretching away. I think the Russell's already hit it a couple of times. So anyway, just saying on NVIDIA, there's levels I want to be participating. There's willingness to own because the stock is fairly cheap after the split. So I think the premiums are really solid. I would just be using options to generate income trades on NVIDIA. And I mean, here's an example. if I were to buy shares right now in NVIDIA, okay, if I bought shares of NVIDIA, let me see what this looks like as a buy rate. So if I say, okay, I'm going to buy NVIDIA right now, and I'm going to go out to the end of the month and sell an at the money covered call. So if I bought shares at 144.50, okay, I buy shares at 144.50, I could sell a 145 call and grab $4. So here's an example. If I buy the shares for 144.49, take on a covered call out to the end of the year for $4.30, I own the shares at 140, I get it called away at 145. That's a $480 income play on something that's going to cost me about 7 grand in margin or about 14K in cash. Now return on capital, that's not terrible. Let's say it's a cash account. So 481 divided by, let's say 14.4. I mean, 3% return on capital, which isn't bad within about 21 days. Now, is that the best trade? I mean, if we go to the downside, I don't have any protection to the downside. So maybe the better plan, I've got the 138 by 137. I've got some other, let me just put another trade up here. So what do I have in NVIDIA? I've got a 132 by 130 ratio spread. That's looking pretty good for some full credit there. Got the 138 by 137. That's a bull put spread. That's looking pretty good there. And then I have the August sell-off. I got crazy low on a wide credit spread at 75 by 55. So, I mean, I'm sitting $1,200 on 10 accounts. I mean, I've got like $12,000 of profit. Okay. So it's profit with no ownership, but I want to generate some income. NVIDIA is a nice way to collect some premium. I'm just curious, if I bought the shares, could I protect the downside? Actually, I don't know. Maybe the best way is just to put on another credit spread. Let me do this. Let's go to January. If I put on another ratio spread, let me see something here. So ideally, this would be, if I had a choice to see like where is price going to go that I'd be interested, it'd be the 100, the 144, or the 200. That's where I'm interested in price for me to take some more action. Okay. So if I were to buy NVIDIA and it goes higher, I can turn that into, maybe a $4 to $5 income play over the next maybe 14 to 20 days. Is that a good trade? It's okay, but I don't have any downside protection. And that's probably the most important thing for me, is if I buy it at 144 and this thing dips to, 130 or 125 or 120, I don't want to spend my time repairing the trade when I could just hopefully stay patient, wait for my level to get hit, or wait for price to find, an attractive level and some dynamic support, then start establishing that we've got some higher highs in the works. But I think this bar count is pretty overstretched, and I'm waiting to see. I can't believe the SPY today. This thing has got 1, 2, 3, 4, 5, 6, 7. This is so stupid. This thing did it just ripped right out of the gates, and it's done nothing for the last hour. Wow, that's crazy. All right, so do something, please, on the SPY. Go to frickin' 609 and change. Go to 610. Do something. If we come back and fill today's gap, I'm gonna be kind of pissed. Because that's a no, to me, that's no man's land. I want to get to 605 today, or I want to get to 609 and change. I just have some trades riding on it. So yeah, I'm going to be angry if I don't get something, even though it's been a good week. All right. That's NVIDIA. We'll stop talking about it. Tesla up to some fresh highs again today. Berkshire Hathaway watching this, this November low. Same type of thing. To me, this is a proxy for a stock that has cash at the ready, a stock that has cash to deploy. It's crazy that Berkshire Hathaway is in the financial sector, even though it's Warren Buffett's company. They are a net seller of stocks for the last quarter, and they have a bunch of cash on hand. And I'm sure that it's for good reason. Maybe they're early to the party, but I'm sure they'd rather have cash and sitting on 4.5 to 5% return on that capital, risk free, versus being exposed on higher valuations when things have ticked up higher. The S&P price to earnings ratio, by the way, has ticked up towards 26, which is historically pretty high. I think I had that screenshot yesterday, right here. Did we talk about that yesterday in session? I think I did. I talked about, just looking back in time, going back to 1989, we haven't seen a lot of the price to earnings on the S&P above 25. And so the last time we were up there, that was early 2000s where we did obviously have a bit of a correction. I mean, a bit, that was a freaking, dot-com bubble. Through 2006, 7, and 8, the price to earnings was actually in the teens. Obviously, we had a great financial crisis there. We get into the valuations during COVID. That's when it was high again. 20.6 in 2019, 30.7 during the COVID crash. That would have been, leading into that crash, and we had it, and then it was kind of a reset. So there's just pretty frothy premiums right now in the market. Valuations are high, expectations are high. We've said this for the last couple of months, especially. This market is basically priced to perfection, but earnings and margins continue to not disappoint, and therefore the melt up continues. Okay. All right. Yeah, I talked about that. The Microsoft thing, it should be next week. It should be next week on like Tuesday or Wednesday. Is that right? Tuesday would be the 10th, 11th would be Wednesday. I'm not sure which day it is, but I'm curious what it does. I don't know if it's going to be I mean, it could be a good thing for Microsoft. Bitcoin is trading at 99.3. We had that little spike up. I mean, that was an interesting daily candle to kind of tap through 100K, get up to 103 and change, and then reject. I don't think we necessarily have to stop. I mean, I've got a technical level which might be subjective, might actually mean something, but right around 107.70 or 107,700, there's a symmetry measure, and perhaps we have a bit of a reaction there. But I mean, longer term, I'm going to remain pretty bullish on Bitcoin. There's all sorts of cases being built. The big thing with AI and Web 3.0 and Bitcoin is that there's scarcity. There's this decentralization movement, and there's countries that want to get off dollar dependency. There's a lot of things, and right now we have an administration that is either pandering to the crypto crowd, or they truly are going to put something in place regulatory wise that is pro crypto. And if that's helpful, great. But be careful on the hawk tuas, be careful on the doges, be careful on the whatever meme stocks crap is out there. It's like I'm pretty much just trading Ethereum and trading Bitcoin. So call me old fashioned, but it'd be like trading to me the Nasdaq and the S&P of crypto. Two of the largest market caps. I'll stick with those. There's ways to trade them now. There's ways to trade ETFs. There's ways to trade options. I'll stick to those. Okay. All right. But Bitcoin just hanging out right around that 100K again. I saw that Nick actually took a trade on Bitcoin this morning, which seems like a pretty darn good entry. So good stuff on that. Ethereum at 4,000 continues to test these previous highs. We did eclipse this May high, which is pretty nice. And then we have this other one for March. So if Ethereum is on a mission to get to all-time highs, it's back up here towards 48.75, which percentage-wise, that's still another 21% higher. That'd be pretty exciting. I need this to stay above $60. It's well above that. I closed out a couple of my debit spreads, credit spreads. I have some ratio spreads, so Ethereum's still looking pretty good. EETH is my ticker. EETH is currently up around $9,700. No ownership, just options, just income, but just going to let these kind of run out and expire through December and January. Copper, I've said copper. If I'm going to get more bullish on copper, I've got to see some more animal spirits out of China. I like this trend line, though. I mean, this trend line looks okay. Meaning this trend line here, but let's see what we get. Do we have a bull market still on copper? Are we still pretty structured? There's a lot of support down here, a lot of resistance here on a much higher time frame, going back years and years and years. But like I said, I think China is a big buyer of copper. We need to see some global infrastructure growth, and I mean, we haven't seen copper get any love from AI, even though it's in every household and every. I mean, you'd think that copper is like in everything, but whatever. So I mean, I like what it stands for. I'm just trying to read out, is this a good spot to be getting long? Japanese yen, no trade. Let's go oil, gold, and silver as well. So oil, I keep talking about this 67 level. Okay. This to me is how the U.S. can keep fighting inflation. if we sit here at these lows or we break these lows, US inflation numbers will be okay. Okay. So they still might print slightly higher, but if energy prices are lower and gas at the pump is lower, consumers don't feel it as much. If the grocery prices are okay, gas at the pump is lower, consumers don't feel it as much. I mean, data points, I don't want to watch it go up by 0.1% each month until we're back above 3%. You know, I mean, we've had a lift out of China. We're looking at tariffs. We're looking at global economic friction. All these things are potentially bad, but if the U.S. is going to be pumping supply and energy, it's going to help. It won't hurt as badly. So I just think this 67 floor is going to be really, really critical. Nat gas, same thing. I mean, I'm sure if oil is dripping lower, then we're probably going to be watching nat gas drop lower as well. So I'm not short. I'm just going to wait, and I'll scoop up some amazing bargains if we get it. Gold, still boring. This is now 8 or 9 days of indecision. 8 or 9 days of indecision. So just keep an eye on it. If you're a really active gold trader, then you're probably watching this tight price action in here, waiting for some type of direction. I wouldn't be surprised if we still have a move lower. We'll find out. If we don't, and this is just a breakout higher, okay, fine. But I'd still like to see this happen. A measured move, finding the 200 moving average. This is another one that stretched out near 300 bars. So very similar to the S&P. Last time we tested the moving average was back here in, looks like October of 2023. So that puts me up around 296 bars, 295 bars on gold. I mean, that's a decent bar count. That's getting up there. So again, whether or not we have a move lower, okay, maybe we do, maybe we don't. But if we see that we're stalling at these highs, we had a big move away from the distance of the 200 moving average, I could see price doing this. Sideways, if it comes back up to the highs, capping the move, sideways, 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 letting this moving average catch up, finding dynamic support, and then I'd be looking to buy low. And if we can stay, adamant about buying these lows, there's obviously profits to the highs. But if we buy the lows and we break longer term, there's good gains there. So I'm just, playing the technicals here. If it pulls back to a nice attractive level, I'll start participating, but I will wait. Okay, silver pretty well supported around 29.50 and really well supported at 26. Measured move still hasn't been hit at 35 and change. I'm long silver, trying to get into the 40s. Bitcoin we talked about. See if we crack that 103,000 mark again. Some of the peripherals, BITO. Let me put a chart alarm here at 26.92 for some fresh highs. And we'll see if we hit some fresh highs. So my calls on BITO are out to 2026. I don't intend to hold them that long, but I'm looking to see if we keep making fresh highs in Bitcoin, if I start inching up higher. My call options on BITO, I'm up around $22,000. I don't know. I'm not saying I'm arbitrarily having a profit number, but with a call option, it's time sensitive. So if I get this thing up to 25 grand, 30 grand, I'll probably at least protect some of those profits on the long calls. IBIT, just going to hang in there, have some credit spreads, doing some dollar cost averaging, own some shares. We go higher on Bitcoin, we go higher on IBIT. FBTC, same thing. MicroStrategy, I'm actually wondering, it's like, what do we get on MicroStrategy? I don't want to do something necessarily out of the money. I mean, I wouldn't want to put a ton of capital into MicroStrategy unless it's at like maybe sub 300. I don't know. I guess I'll just stick with the IBIT. It's like I like this stock because it's just crazy high premiums and high volatility. But the way that we just blew through every level and we were kind of front running Bitcoin, it's just slowed down a little bit. So, I mean, I've got some bull call spreads. Those are out of ways, like in time. So I'm not really worried about those. I'm just wanting to see, do we have some levels they'll be a little bit more attractive to start selling some more premium. And I would say right now, this is like the IV has gone from a big swell down to a contraction. So I feel like I, maybe miss the opportunity to, jump in here, but it's hard to do it when the thing's just ripping higher. I don't like chasing and selling premium when it's like I got to sell at higher prices. So I didn't. Coinbase is fine. Ethereum we talked about. We did the Mag 7. Let's get to some currencies now. Let's go DXY. Okay. Dollar index is bouncing. I told you this week, be careful on that 200 moving average. Okay. Did we not talk about that all week long? I said, watch this 4-hour 200 moving average. And what did price do? Bounce. I don't think this dollar is going to be breaking lower. I still think this dollar maintains bid. We can come right back to the same range level around 106, let's say 106.50 to 106.75. We could also have a range on the dollar where we have lows here and highs that were tested back to 108. Listened to an interesting podcast last night, just talking about I think right now, like Greece is paying less in debt than France. And Germany is also, on a brink of recession and slowly starting to see like their stability slipping away. Eurozone could be in some trouble in 2025. We could have some sovereign debt issues. We could have some fiscal crises in the entire region. So, I said I'm pretty eager to buy, euro dollar at parity or lower, and we might get there. So I just throwing it out there, like there may be a trend continuation on the euro dollar. If we're being smart, okay, I mean, keep an eye on this. This is a pretty easy way to look at the euro dollar. If we trade on the right-hand side of that trend line with some confirmation, the euro dollar can come back. Look at this. Look at this trend, by the way. 4-hour time frame. Once this thing topped out with equal highs, test, perfect rejection of the 200 moving average. We could be doing the same thing here. Right? So if this thing rolls over, I wouldn't mind a euro short position, stop loss above the 200, and see if we can get back down to the same lows or go lower. If we're breaking on the right side of the trend line, as far as asymmetry goes, I like this potential setup here. If I went to a short position, let's say we get on the right-hand side of the trend line, stop loss above that 200 moving average, I would target parity. And if you look at that type of setup, you're talking like maybe 3-1, maybe 4-1. It's a pretty good looking trade. So I just, Pulver alerts wise, I'll be watching. I'm not ready to take the trade just quite yet, but I will look to see if we continue to see some dollar bid and dollar resiliency, that the euro dollar, the eurozone might be in trouble. Also, ECB next week, I think, may be cutting rates. Let me check that really quickly. We have 6 rate decisions the next 2 weeks. Aussie's expected to pause. BOC looking to cut 25 basis points. My dollar CAD long, by the way, dollar CAD long is up to 140, 146. Son of a gun. I missed my add-on trade. I mean, it's fine. I'm still stacked up at 42. I might as well add another one here at 42.50, which I will. So let me add that now. So 42.50. Let me put in a new trade, create new order. Let me go 25.05 in the trade size, 42.50 on the position. Take profit. I'm going to go after 40. I've got 44.50, but I might actually bump that up. Okay, so I'm stacking that one, and I might as well stack one more. So 25.06. I want to trade these all non-FIFO. That's a breakout of 4,300 and a 44.50 take profit. Okay. So I'll update that in the Pulver alerts. I'm going to throw in a 42.50 and a 4,300 stack trade. These are buy stops, and all I'm looking to do on dollar CAD is if we get up to this measured move, if we get up to those previous highs from 2016 and 2020, this is target 1, this is target 2. If I'm stacked up, I already have 3 positions in right now. And if I go 3 entries, 4, 5, 6, going to my profit target, that turns into a nice little winner when it's all said and done. Okay. So just throwing it out there. I like this trade. I like this measured move. If BOC cuts by 50 basis points from 3.75 to 3.25, they cut 50 basis points. I think this trade is going. I mean, it already looks really good. It's already postured for longs. If it keeps going, let's go, baby. Let's get to 45. Let's get to 46. Let's crush that trade. And then we have the Swiss National Bank. Oh, look at this. We've got a 25 basis points cut expected by the Swiss National Bank. Carry trade. Let's go, Swiss National Bank. Okay, this could be good for all my Swiss positions. I've been scalping that thing for literally 2 years. I've been, adding positions. I no joke probably have over 100 positions running between Aussie Swiss, CAD Swiss, Euro Swiss, Dollar Swiss, Pound Swiss, New Zealand Swiss. I've got robots that are scalping them buy only. I personally have a stacked up position in the whole thing. And if they cut another 25 basis points, that could finally, be a nice little surge to the upside. This thing can rip, have some positive swap. Let's see what happens. So cool. What about the ECB? Looking to cut another 25 basis points. Okay. So we're talking Aussie pause, CAD cut, Swiss cut, Euro cut, dollar cut, Bank of Japan, likely not doing anything. Does that change anything on the yen? Probably not. Does that make me want to trade the yen? Absolutely not. But we're going to have some cuts coming. Okay, so things just got a whole lot more interesting. Now there's still yields, right? Like there's still positive swaps. Be aware of some of those official cash rates by these central banks. So just throwing it out there. With CAD and Swiss cut, do you think the CAD Swiss? To me, the CAD Swiss is still a positive swap. I think that the issue with the CAD Swiss more than anything right now is the oil prices, right? I mean, if we look at let's look at like Aussie Swiss versus CAD Swiss. So CAD Swiss came all the way up to 64. It's down to 62. I mean, with today's price, I mean, I'd like to see this thing stabilize and then come right back and fill that little pocket from today if we had a news reaction. All right. But in the event that this CAD Swiss breaks this low, where do we go? Probably back down to the flash crash low, and that would be my support. And here's what I'll do. In my bigger position, I will just wait. Okay. I might take one trade at the low. And then if we break the trend line, I'll take another trade and I'll probably have some buy stops to stack back up. And I'm going to try to take it to this pocket or this pocket and look to see if I can find some efficiencies. This is still a small price target. Okay. Now, if we go lower than that crash low, I'm looking at this as, and you gotta think in the future here. Let's say we take out this low. Okay. Some of you might be saying, like, Chris, you're an idiot for holding that trade. And I'm going to say, hang on a second. If there's divergence in overbought conditions or historical lows, my chances of getting a reversal pattern are pretty high. And at some point, I might, I might not time it perfectly, but let's say 6,000 happens to be a historical low and a round number, and the market wants to bounce at it. Well, I can turn this into a manageable drawdown into a monster winner. I've done that many, many times. So that is still an attractive trade for me. If the CAD Swiss doesn't cooperate, I'm still going to hold through it. I've got plenty of margin, got plenty of cash. My drawdown is single digits. I'm not that concerned with it. Okay. But I will be watching it. Okay. So let's see what happens. But if we have a CAD cut and a Swiss cut, it doesn't really matter. I mean, I'm still getting paid for the trade. If we come back down to the flash crash low, that is a strong area of potential support. If we go lower, the first thing I'm going to look at is this level to this level. Are we oversold? Are we showing divergence? Then we break a trend line, and then we start to make our way back up, and we're looking for those liquidity runs to the upside. So would it suck to sit in a drawdown, a little bit deeper drawdown? Yes, of course. I'm going to hate it, but it's still manageable, And I can say this: if I come out on the right-hand side of this trade, I'm going to make a lot of money. Okay, it might be a little bit of pain in the near term, but longer term, if I get what I want, and I don't mind buying off historical lows ever. I don't mind selling at historical highs, especially in the currency market where it's not meant to go all-time highs to infinity like the stock market. We have 30-year historical lows. There's some type of I just think there's some type of structure where it's like currencies don't have exchanges that just go to infinity. They don't go to zero, they don't go to infinity. There's like levels that are traded, right? So anyway, we're gonna see how this all plays out. But the CAD has been beat up pretty badly. Aussie Swiss, same thing. Like they're getting beat up pretty badly. So does next week with the Swiss National Bank line up? Yeah, it lines up pretty well. Doesn't mean I like what it's showing me right now. No, but what would I be watching for? How about a test of that August low? Okay, because if we do this, lower, 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 and it leaves these big open pockets with a bunch of inefficiencies, I will definitely be taking a trade at that low, okay? And I will test. And then I'll look for a price pattern. So it's like I'll test the level, then I'll look for a price pattern. If I get a price pattern, then I'm going to add up trades like 3 to 5 and then get back to a pocket, find a level of support that I want to trade to or resistance I want to trade to, and I'll turn it into a profitable trade. So I'm just looking for an opportunity, you know, and we'll see how it plays out. Dollar Swiss also pulling back. You know, how does this change? Well, next week, dollar Swiss could be a good trade. In fact, I'm going to throw in, let me see what this trade size was. So that's a 39.99 position. Let me see. I'll wait on this one. If this one goes up, that's still my profit target at 92. If we have a slightly deeper pullback, then I'll probably add around 86 and back at the lows around 84. I don't know. I just don't know if I'm going to get it. I think what I need to do is just stack this thing higher. I'm going to go 89, 9,000. I'm going to stack these up right now. So let's go 89. I'll change the trade size here. I'm going to go like $1. So let me do a buy. It's going to be a buy stop at 89. And I'll do this for, I'm going to cut the trade size to 2. Actually, this 39.99 is my net position from, okay, there we go. I can see my arrows here. I've got, this one was a small win. I have trade 1, trade 2 stacked up. So I'm in 2 trades right now, around 2,000 units each. So that means if I want to trade non-FIFO, I need to do, I think I did 2,001,999. So I'm going to go 2,001. And that would be an 80. Let me go 8,900. That keeps me out of the way. 9,200 is going to be my take profit. What? Oh my God. Is that a freaking market or you dumbass? All right. It's fine. I'm not that. It's more, I just totally messed that up. That's supposed to be a buy stop order. Buy stop at 8,900. Now I have to change the trade size. All right. 2002. Take profit at 9,200. Buy. There we go. So that's 89. Now I'm going to go 89, 50, and 9,000. All right. So let me try that again. So create new order. Let's go 89.50. Trade it for non-FIFO, so 2,003 units. Take profit will be 9,200. 89.50, buy stop, place. And then another one at 9,000. There we go. Okay, so 2,004 units, 9,000. And take profit at 9,200. There we go. Okay, so I talked about this at the Algo conference I was at in Melbourne. People were asking, I talked about FX investing and talked about a robot. Position-wise, like dollar Swiss is one of my better position trades. Dollar CAD's one of my better position trades. Dollar CAD I'm trying to hold out to 4,500, possibly 46. Dollar Swiss, I said 9,200. I'll level in. If we come all the way back down to these lows, I'm going to level in. The nice thing about the trades that I just put here is if this goes lower, these trades are never filled. So what I can do is I can shift these all down to levels I think are a little bit better prices, obviously. And then if I wanted to buy more, probably buying more in this structure low. But if we end up making a run to the upside, great. We stack up these 3 orders. We got a nice profit target at 92, and I build this thing up from $6 a position to another 2, 4. So that'd be basically I'd have a 12. What is that? A 12,000 unit position, which isn't, I mean, it's not a lot, but I'll end up making, stack this up with a break even around 80, let's say 88 and change, going to 92. I take $1.20 times about 400 pips. So I make a few bucks there. Okay. When DXY stays strong, how's that affect? Sarah, sounds like you want to read about the milkshake theory. If it gets really bad with the dollar super strong, read about the milkshake theory. That is why gold, that is why Bitcoin, that is why non-US alternatives are becoming more and more popular. Okay, so just be mindful of that. All right, SPY, what are you doing? I guess we're topped out at 609 today. All right. Anyway, that's it. Any other currencies you want to take a look at? I saw some yen pairs earlier. That's my least favorite of all time. So there's my Aussie yen. We're seeing some strength out of the Japanese yen. I didn't actually look at the currency strength today. Get rid of that. Get rid of that. Get rid of that. Let's go currency strength. Swiss and yen stronger. Commodities is getting smoked today. So, this is definitely a commodity play because China is up and New Zealand Aussie is down. We've got CAD down, Aussie down, New Zealand down. By far the weakest currency pairs of the day. CAD news wasn't, super gangbusters, but we have risk off trading currency-wise at the top. Yen, Swiss, dollar, top, and your risk on commodities especially weak. And yet we somehow made an all-time high. So weird stuff, man. Weird guy, Ace. Weird guy. Let's see here. Euro Aussie. Yeah, they're not the currency pairs that I want to chase. Euro Aussie, Euro New Zealand, Pound Aussie, Pound New Zealand. They're probably ripping higher. But to where? If we're going higher, it's like we've got levels here, levels here, levels here, levels here. If you're looking at a smaller time frame, we do have really strong support around that 6,000 handle. To me, the trade is done. Like I've missed the chance to buy this thing at a support level. There may be some ability to grind a little bit higher if you want to put in some trend trades and then put in like tighter stop losses. But the bigger picture move, the open space is done. Like this would have been, you got to buy this thing at the lows and trade it back up to these range highs. I've already missed the trade, so I've got no actionable trade on Euro Aussie right now. Euro CAD, I'm staying out of this one. I'm glad I didn't force a trade here. I was considering a sell trade on Euro CAD, but I think sitting at those floors and looking at the currency strength, it's like I just don't see the CAD. Plus, with cuts coming, I don't see this one necessarily turning, so I'm going to stay out of it. And also coming into next week's rate decision, which is BOC and ECB, they're right in the middle. So this could easily go up or down next week. I'm not going to pick a direction. But if it comes all the way up here, does it actually hit resistance and then sell back off? Maybe there's a range trade there, but I got to wait and see on that one. I don't like that. Pound CAD, same thing. Really big rejection off the daily 200 moving average. Coming into next week's trading, do we hit this high? Do we hit the high and then reject? Maybe. That's about the only thing I can see that I'd like to trade. So anyway, I'm not going to do anything on those. Let's go Euro New Zealand. Also going higher. To me, this is also a big range trade. So support was down here. Resistance, still has some room to run. They're actually, if there is some space to trade to the upside on a shorter time frame bullish trend, there's more room to run into these resistance levels at like 83 and 8,400. So there's a little bit more upside potential on Euro New Zealand to trend a bit more. But again, trend system, buying low, tight stop losses, trying to get some asymmetry to your profit side, let it run a little bit higher than your stop, right? So I like Euro New Zealand better than Euro Aussie. I can say that. Okay, I saw you, Sarah. I see you typing in all these chats. I was just looking at Pound CAD because I looked at Euro CAD. Pound Aussie, running really, really hot. I just wouldn't be surprised if this thing finds resistance. We are having some higher highs and higher lows. Where could this thing rip up to? Possibly into these, this equal high where we had that August little crash. And is it hitting here, then come back? It's already ran. It's so much. It's ran so much. Ran so much. It's run enough that I'm not chasing this thing. Like currencies, especially, I never chase currencies. If I like a direction, I will stack it up. Otherwise, I wait. I set lots of chart alarms. I let price come to levels that I want to trade at. Okay. All right. Let's see. Pound New Zealand, same type of thing. Is there potential resistance here? I could see it, but I'm not going to call this top. This has been in an uptrend, possibly in an uptrend here. Does it run out of some steam? Maybe. But if we don't see a big turn and shift in commodity pairs, this is not the currency pair that if we get in a trend, this is not the currency pair you want to be here and call the top. I mean, this thing can trend 1,000 pips. So again, maybe watching some resistance ahead, but not forcing a top trade. So I'm just going to stay out right now. Look, the only way I like the Aussie and New Zealand dollar right now are leveling in very small against the Aussie dollar, New Zealand dollar. Aussie dollar, it's coming back down. It's at 63.86. We are tapping some lows again. I've got pending orders at 63, 62, and 6,000. I'm still waiting. Like this area, and then 6,000 is, kind of my bargain shopping. But if we hold this level, I'm looking to kind of scoop up some Aussie dollar long. New Zealand dollar, same thing. This one I'm already in because it came back to a multi-year low, and I'm watching to see how I can scale into it back down to that COVID low. COVID low right there and 2022 low right there. So rather than chasing or trying to do something stupid on a high volatility pair like the pound New Zealand or the pound Aussie or New Zealand Euro Aussie, to me these just seem like cleaner trades. So I'll wait, and I'm going to scale into these. Let's see, I'm in 2501. I'm going to go 57. I'm just going to put this trade down here, 5605. This is a buy limit, 56. Let's go 05. 2550. The take profit's going to be back at 6050. Okay. So a couple orders there on New Zealand dollar. Aussie dollar still pending. Where is my expiration here? All right, anyway, keep an eye on that. Okay. Drew, what's up, Drew? How are you, man? Hashtag Algo Conference. Nice to see you. What time is it, your time? It's got to be normal hours, right? Is it like 4 in the morning? 3, 4 in the morning your time? You're not in Melbourne. You're over the mountains, right? Anyway, thanks for coming in. All right. Anything else? I saw pound yen. Here's my easy analysis on pound yen. Trade short term. 1 hour alignment. Follow a flow. Line up a 1 hour, 30-minute, 15-minute. If you like a trade, take a trade. Otherwise, stay the heck out of it. I can see the pound yen with this high and this low, just doing a bunch of this. Just a bunch of this. And eventually, this high might mean something. This low might mean something. But I would just be prepared for a lot of garbage. So does that give traders opportunity? Sure. If you're a short-term trader and you get those nimble turns. Otherwise, my least favorite currency pair is the Japanese yen. So I'm not trying to force it. 3:15 a.m., man. Well, I appreciate you waking up and being here with us. Okay. All right, everybody. That being said, the rest of my day is just taking a look at some of my 0 DTEs and looking to manage them for today. Still watching the SPY to see, do we get to 610 today? Do we get to 605? Qs, what do they do today? Qs at 525. It's doubtful we're coming back down to 520. AMD, watching this one. We're trading at 141. That might be a small loss. Son of a B. All right. We'll see. They're manageable. It's fine. Had some good winners this week. BAC, CLSK. Walmart was a really good winner this week. Let's see if Walmart's pulling back. Not really. All-time highs again on Walmart. Palantir. Holy fudge, man. This stock is crazy. Like, I can't look at this stock and think, like, I'm going to buy it. So I'm not, but it's like, fudge, just freaking pull back. This is crazy. So anyway, it is what it is. But I just, I know if I'm patient, these don't end well. So going up this way, we eventually do make some type of corrective move. I'll just wait. I'll wait to see if it comes back to this level. Maybe it does, maybe it doesn't, but just not chasing. Okay. GBTC. You still trade GBTC? I mean, that was a good one. The reason I got out of GBTC is because of the price structure. I made the switch. I had GBTC for a long time. As we got this run in 2023, that was a nice run on GBTC. But once we started to see the rumor mill of all the ETFs being approved, and BlackRock gets in the game, Fidelity gets in the game, their cost structure was so much lower than GBTC. I'm like, yeah, I'm going to get out. So I ended up bailing on GBTC with good gains, but I put that entire position into IBIT. But look, it's Bitcoin, dude. I mean, what do you want to do with it? If it pulls back, you like Bitcoin, buy more. But because of the fee structure, I like IBIT better. Yep. So I mean, it's killing it. That's awesome. But I'm just saying, like, this fee structure is a lot more. It's like 2 to 3 times more expensive than IBIT. So that means something when the same type of correlation. I mean, IBIT trading at $56, $57 versus 78 with a third of the fees. So anyway, food for thought. Okay. All right, buddy. We've gone, I'd say, long enough. And it's Friday. Enjoy the rest of your day. I've got some trades to monitor. Watching the SPY, see if I get to, there's 2 levels I'm watching on the SPY today. Qs I'm watching, AMD I'm watching, and more to come next week. So that's it. Have trained lots of profits. Real quick on my end, I know, like usually I've got an afternoon session, 3 p.m. to 4 p.m. On my YouTube channel. That's youtube.com/Chris Pulver. Pulver alerts, everything with Edge Finder, Stockbox. Get your hands on all the great software with A1 Trading. And if you're interested, I've got a $27 course called Practical Options. If anybody is, seeing me talk through a lot of these charts, I'm always thinking of option trading. It is, to me, the easiest asset to give me the best opportunity for a binary type trade. If I win, it has to be above this level, below this level. If I lose, it can pretty much go to the moon or go to zero, and I have defined risk. So there's a lot of margin for error, which is a great thing to have. Not a lot of assets give you that luxury. You trade Forex, you get stopped out with a spike. You trade futures, you get stopped out with a spike. A lot of liquidity hunts. It drives traders crazy, right? And traders get so frustrated by getting beat up by the markets and tapped by those spikes and tests. Option trading, you eliminate all that crap. You have a trade for a certain window of time. Doesn't matter what price does, but when it's all said and done, does it get above that level you want it to, or does it get below it and it becomes a manageable loss? So you take out all of the complaints that I've heard for the years where traders are just like, they ran my stop loss. It's not running stop losses, but it's just liquidity hunts. You're going to see markets test highs and test lows because it's going to make liquidity sweeps. It happens all the time. The hard part is how do you trade that, right? I trade it because I trade smaller and I don't use stop losses. But I've got a lot of traders out there that are Forex traders or futures traders that are using prop accounts, and you have rules. You got to have a stop loss and everything. That makes it really challenging. So I'm just saying, if anybody's interested in learning how to trade options for $27, I've got a pretty good course that I think would get anyone up to speed from from knowing nothing to being pretty lethal in the markets, at least enough to express how you want to trade. So if you're interested, you can check it out. It's on my Discord. It's also a Vimeo page. It's vimeo.com/on-demand slash I think it's quick options is what I have here. So I'm not trying to make like a shameless plug, but I'm just saying I thought a lot about this when it comes to trading. I know that look, I was in Melbourne. I was working with TradeView. I met Martin Dopke at 8cap. I know Nick and the team know Martin really well, and all they have a great partnership with 8cap. So anyway, we had a lot of good talks, and I know the space. Like, a lot of traders right now are looking for third-party funding, and they're doing it with prop firms. Okay, well, if prop firms have really tight rules where you got to place a trade, you got to place a stop, and you're trading markets that like to hunt highs and lows, your stop losses are always going to be at risk, always. And if you have to trade a prop firm with a drawdown of no more than 5% and no more than 10%, it's going to be tough to win a lot. So I take a lot of that crap out of the equation and I trade options. So this to me is a very cost-effective way to jump into it. Okay. Now I'll say this: if you buy the Pulver alerts and you're a subscriber to A1 Trading, I will give you this course. Actually, I'm giving you my full course, which is $497. I'll give you that. So I know the team already has that access. So if you buy Pulver alerts and upgrade to the VIP stuff, like, you get the full course. That one has 11 videos, 13 strategies. This one is 6 strategies. but this is like the down and dirty, quick way to get involved. Cool. All right. In my country, option traders only lose while buying options, right? Which is why I'm an option seller. I'm a premium seller. I trade spreads. If your traders would trade spreads, there's a totally different percentage there. If you just buy options, you're probably going to lose. It's pretty simple. So I trade a lot of spreads. Okay, think outside the box, man. All right, I'm going to let you go. Thanks, Lee. I appreciate that. Okay, everybody, have a great Friday. Have a great weekend. We'll see you soon. Bye.